Good morning, everybody. Welcome to the Locke in Your Success Trade and Market Update for March 24th, 2014. Before we get going, I'd just like to quickly remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And please note that we do use some hypothetical computer-simulated trades, and the performance or the results are believed to be as accurately represented as possible. Okay. If you're watching this on YouTube or some other website, come on over to our website, lockeinyoursuccess.com. Check out our programs, M3 Bearish Butterfly ROCK, our group coaching and trading triangle programs, as well as the M21 program, which should be out. I should have an actual date next week, but probably the second week in April. So that should be available for purchase then, and I'll send out stuff so that you won't miss that. And if you come on over, make sure to join our mailing list, get this free report, 7 Secrets to Becoming a Successful Trader, and sign up for the webinar. All right, so it's results week, and we can take a look at that as well as some other things, but before we get going, let's take a look at the charts. If you remember, we have these little circles where I estimate where the market's going to close every month, and the SPX closed right on. I thought it would actually be a little bit lower coming into last week, but we came in and hit that pretty much dead on. The Dow was slightly low, which isn't a surprise. The NASDAQ ended up being right towards the bottom end of our circle, and the Russell, I had 2 targets. I had one down here, and I thought that was actually the more likely target because we were thinking that the market was going to roll over here. Are people hearing sounds? Okay, Steve. I just had somebody who wasn't getting any sound. Okay, great. All right. Thank you. I just wanted to check and make sure. We don't want to be talking for half an hour and have nobody hear me. So, super. So as I was saying, we had 2 targets. We had the lower target if the market rolled over, and the higher target if the market actually broke out. And of course, we broke higher, and we landed right in the center of our target there. So the market's acting pretty much as expected. As far as where we're going from here, if we come back to the SPX, last week I had this out. It looked like it was going to run into like what we call a broadening pattern where it gets increasingly volatile, but it more or less settled down, and it seems to have settled into a range here. So that's actually kind of good news because it makes things a little more predictable. So right now we settle into this nice sideways range. We're near the top of it. I believe that we're going to hold a sideways range here, probably break lower than what we have here. I'm thinking this diagonal trend line, I don't think we're going to be running higher highs here. It's possible we do, but all our short-term charts are basically telling us that the market's overextended. All our longer-term charts are basically telling us the market's overextended and it's due for an extended time of sideways movement before it goes any higher. As far as our short-term charts go, however, our short-term charts technically are very, very bullish and say we're going higher. So I have conflicting long-term and short-term objectives here. But so from a pure technical standpoint, short-term, we're going higher. My opinion, because of the long-term drag that should be on the market, that we're going to continue sideways. If we come back to the Russell, what that means is we really shouldn't be breaking significantly higher here. I mean, we may test a little bit higher and then back down. And I'm still thinking we hang in this range somewhere between 1145 and probably 1120, 1125 for the month. And we can reevaluate weekly as this goes on. I have not set. I haven't had to actually taken the time to figure out where I think the market's going to land in April expiration. I'll have that for you guys next week. But as for now, I do believe we're sideways, and I know my projection is going to be down here, pretty much the same level we're at now, maybe slightly lower. But I don't have the exact number yet, so I have some calculations to do there. So that's what we're thinking with the markets. As far as our trades go, yeah, I like sideways too, guys. As far as our trades go, let's take a look at what we got going on here. Our April, let's see, let's go back and we'll just take a look at what happened in March and what expired. So let's start with the March M3 trade. The March M3, if we go back to Monday, and we'll go back to just go back in the morning for now. We'll show you what that looked like. Yeah, we're up about $1,800. Delta was a little bit too negative here. And nope, that's not the right trade. Let's go to the website trade. That was another one I had on. This one was up about 12. Delta is way too negative coming into expiration week. Because it's expiration week, I do look at these intraday, and therefore, but I didn't do anything apparently on Tuesday intraday here. I waited to the end of the day. We did 10 condor orders to just roll out the upper side. So there were 10, 1190, 1200, 1210, 1220. So if we go to if we look at where we are now with our shorts at 1190 and our longs up here at 1210, those were just rolled higher. If we come to the end of the day, you'll see that. If we popped up here, just kind of stretching ourselves out a little bit. I'm still pushing my delta number a little bit negative, but I'm not that concerned about it because I'm so deep inside the tent here. So this is what we looked like by the end of the day on Monday. And then on Tuesday, the market continued up. So in the morning on Tuesday, I did 5 1200, 1210s, and in the afternoon, or a little bit later in the morning, we did 5 1200, 1210s once again. And that ended up having us look like this by the end of Tuesday. We just rolled the shorts up to the 1200 area, and now we're looking at about $2,800 profit and loss, and this is what the position looked like here. And then from there were basically no further adjustments because the market just kind of hung sideways. And by Thursday, let's go Thursday to noontime. I didn't expire this. I closed it. I didn't like how tight the trade was. And you know, we get these settlement gaps sometimes. So I just decided just to close this thing out. And I shut this down. And I'll have the exact number on, I didn't write it down here. I'll have the exact number on the results sheet. But it was up near 10%. I think I actually had over 5% by the time we closed at the end of the day. Because, you know, you get the time decay and the market sat pretty good on Thursday. So closing it was pretty easy. As far as the ROCK trade goes, let's just take a look at the March ROCK trade. Let's go back to, let's see, Tuesday. Let's go back to Monday. We'll see what it looked like on Monday. So here's our March ROCK trade on Monday. We had gone back into cat position earlier in the week, and we're just kind of sitting here, and the market was relatively sideways. Now, as I come into expiration here, if the market's just going to sit here like it has, usually what I'm going to do is I'm going to raise the inside of this line, and how we do that is we start pulling out these inner wings. So on Tuesday, I pulled out, let's go to the end of the day. On Tuesday, I sold off 3 of the inner wings on the condor. And if you take a look at the T-log, you can see that here I did 2 and then 1, so a total of 3. And then on the following day, which is Wednesday, I pulled out the other 7 because the market was flat again. And at that point, I wasn't too concerned about the short strikes getting hit. So this is the way we looked at the end of the day on Thursday. And if I run to, I'm sorry, the end of the day on Tuesday, and if we go to the end of the day on Wednesday, I pulled out the other 7, and this is what we look like by the end of the day on Wednesday. We just pushed it right into a condor, and then this trade, it was nice and wide, but I decided to take it off anyway on Thursday. I just closed the position out, And that was a decent profit too. Like I said, I'll have the exact number on the results sheet, but this was just closed out on Thursday. All right, and that's all that was going on in March. If you remember, we had already closed out the Bearish Butterfly and the V Condor. So let's go to our April trades. April, let's see here. Let me look at my notes. April, let's Bearish Butterfly. April Bearish Butterfly is right here. This trade was untouched, so nothing happened to this. Let's just come to Friday. There were no adjustments. Here is the current matrix position we have on. Here's what the position looks like now. If we're correct with our assumption and the market runs sideways, it should be a very, very good month for this month. We'll see what happens. And it's currently up about $4,000. So everything's going perfectly fine. Realistically, by the 21st, we're up more than 5. We can either pull it to the lowered profit target guidelines, or we can keep it in there and let it run a little bit longer. Maybe we'll do a little bit of both. So here is that, and then we had the April V Condor, which was already on. This also got no adjustments. This position is sitting right here. If we look at our analyzed graph, this is what we look like. And finally, it's back to break even. The market continues to run sideways here. This really shouldn't be a problem. Even if it creeps up, it really shouldn't be a problem. And obviously, if it starts swinging back down under 1170 or 1175, we'll probably start pulling this V out, see if we can get the expiration graph a little higher. Again, not going to be a banner month, but it should be a positive month. I don't really see any issues here. If the other thing I did on Friday, or earlier in the week, I did put on our April Bearish Butterfly, April M3 trade and the April ROCK trade. So let's start with the April M3 trade. I believe this was put on the 17th, right? So let's go back to the 17th. It was earlier in the week. Here is what the entry looked like. Let's see. I chose to do the 1160 butterflies with 5 1160, 1170 put verticals and 1 93 delta call. Gave us an expiration graph that looked like this, which is a really nice looking expiration graph. Nothing really happened all week, so there wasn't a whole lot to do here. I mean, the market shot up a little bit, shot back down, didn't hit any investment points. And if we pull this to the end of the week, it's actually up about $1,000, I think, about $1,078. And here is what our current position looks like now. So everything's going perfectly fine here. Again, if it does what we think it's going to do and kind of hang in here from the 1150 range up to maybe the 1210, this will be a really nice trade for the month. We'll see if that actually happens for a change, because the market hasn't been sitting in one place very long. But that was the April M3 trade. And then the April ROCK trade also, once again this month, did not hit the delta guidelines to go into a ROCK position. So we ended up being in an M3 position. And I didn't enter this till Friday after the last one, after expiration day. So this is basically it flat, because we just entered it Friday afternoon. And I did the same thing here. I wanted a little bit of variety, so I came into the 1170 strikes. I did a straight butterfly, and I added 2 calls. And this position looks like this here. If, again, if we stay in our range we think we're going to be in, this should be a decent month. I don't know if this one is going to get into a ROCK position this month. We'll have to see. The market's going to have to go up to the 1220, 1230 range to do that, or we'll have to get rolled back, and then we'll have to bounce to do that. But we'll have to wait and see. So as of right now, this is the ROCK position. And the one last thing that was entered would be the May Bearish Butterfly, which I happened to enter early in the morning on Monday because the market was up, and I was fairly sure the market wasn't going to stay up. So I just had a gut feel for that. And I just entered that in the morning. So let's see, May Bearish Butterfly is right here, and the position was entered in the morning around 10:30ish, for like 990 or something like that, 995. Bought the butterflies and just kind of pulled back, and here we sit. Nice, nice looking. So if we stay range bound, this should look really nice. And of course we had our May V condor on too, because I just saw that. I don't want to miss that. No adjustments to the May V condor. This position just looks like this. Really wide position. So I wouldn't anticipate any trouble here. I do imagine we'll be taking out the V's because I think we're going to stay in a sideways range. You'd probably actually be better off in a regular condor this month, but yeah, we'll play this out because you never know. The market takes off on a whim. And that's pretty much all the positions there. Let's take a quick look at what we had for results for March. If you remember the bearish butterfly, we ended up closing this out at a 23.4% loss. However, you got to keep in mind that this is a trade that could have easily been won with very minor modifications, right? If you remember way back in the beginning of the trade, when we put the trade on, we had to do a rollback adjustment. And I said at the time that with the bullish market that this was probably it would be a poor decision to continue to trade with the bearish butterfly guidelines. If the market reversed, you should make some minor modifications. I gave you a few options, and any of those options would have netted a positive result for the month in this trade, following the guidelines, because we had a fairly hard 100-point down move from when we put it on, and then we had a 125-point up move reversal that did whipsaw us out of the trade to the upside with the guidelines. So like I said, an easily winnable trade, but it ended up being a loss by guidelines, which is basically what's been happening a lot of last year, because it's just it's a bad timing in the cycles for this position. And again, easily corrected. So just keep that in mind. M3 trade ended up being a 10.3% gain, so it was slightly over $5,000 by the time it was closed out. The ROCK trade ended up being a 17.4% gain by the time that was closed out. And the V trade, if you remember, we put that on at the top of the market, and we had a 100-point down move. I decided to close it out at minus 5.5%. I would say that is a legitimate loss for that trade, although I did have some clients that won the March V trade this year, this month. It was just a matter of timing more than anything else. But very bad timing on entry here, and that one took a minor loss. First loss in, oh gosh, I think it's like 18 months on this thing. So it's been a good run, and you do get those once in a while. So it was a really nice trade. As far as for the year so far, bearish butterflies up 15.1%, M3's up 19.3%, ROCK is 34.4%, and V trade's up about 8.7%. So no complaints there. Good year so far. April looks like is shaping up to be a nice month. We'll see how that goes going forward. So that is all the positions. Okay, and we'll just take a look at some questions here. First, Andrew, am I concerned about being forced to roll back the May bearish butterfly near support? Yes, yeah, because that's what's been happening to us for the last year or so. We either, one of two things happens. You have entry day is on a support level, and the market's been so bullish that we've been getting major 100-plus point moves off these support levels. And it's not that the bearish butterfly doesn't do well in an up market, but it's not going to do well with a 100-point up move, catapulting off a support level, which is basically what's been happening. That's been the first thing that's been happening. And then we had a couple of months where we actually hit the very top of the market, and we pulled back 50 points. And when you pull back 50 points on a bearish butterfly, you're basically at your rollback point, and you roll back, and then it catapults off the support level. So it's been more of a timing issue than anything else. And so for this month it's the same thing. If we pull back, what am I at, 1180? I have my live bearish butterflies are actually at 1190. And those were put on early after the really big 30-plus point up day we had. So I put those on like 70 days to expiration. But yeah, there's a possibility we hit a rollback and we bounce. So I would probably treat it the same way if you do actually hit a rollback point, which would be let's see, if it's a 1180 bearish butterfly, you'd have to be 10 points over your long strike, so like back to 1140. So if we do tag 1140 and have to roll back, then I would, yeah, definitely again protect to the upside. So and just deal with that. All right, and then we have another comment from Keith, who just time for a few great months, a much needed reprise for many of us who are frustrated with their income trade results since January of, yeah, well, you know, I agree with you. The market has not been sideways, and you know, if you're doing these market neutral trades, it's kind of like, and the market's moving, the extent that it's moving, if this was a high volatility environment, a market neutral trade takes these kinds of moves without really much of a problem. But the thing is, we're in a very low volatile market, which means you get a lot less money and you have a tighter range with your positions, and you're getting these really large moves in there, primarily just up moves. And the market neutral trades are more usually susceptible to an upside problem than a downside problem. So and that's what we've been having. So it has made it challenging. I think for the most part, it's been working out at least for me. I mean, it's been working out fine as far as you know, month to month. However, and it should be working okay for you guys. And if you've adapted to it by doing the minor adaptations we've been suggesting, you've probably had a very good year. However, it does make it particularly challenging for these trades because it's almost like trying to trade a bullish strategy when the market's falling or a bearish strategy when the market's going up. You know, it's very difficult to make money buying puts with the market going up, and it's very much difficult buying puts or going bearish when the market's going down. But we're neutral, and the market's not neutral. The market's clearly excessively bullish. So anything bullish has been doing fantastic for the last year and a half. Anything bearish has been getting killed, and anything neutral has been getting kind of, you know, beat up. Unless, of course, you've either timed the market a little bit or you've left the trade open so that it can't lose to the upside. In that case, you've been doing fine. But, you know, to be frustrated in this environment is, I mean, you can't let it get to you. The market's not neutral. When the market goes back neutral again, I mean, you get your fantastic performance back. All right, is 1180 a suggested new butterfly or an existing trade? Oh, it's going to be for the bearish butterfly. That's the existing trade for our bearish butterfly this month. All right, and I think that's all the questions. Are there any other questions going on? So it seems like yes, the crazy bull skew has come out of the market. So that's an interesting point you bring up, Andrew, and it's something I was going to mention. Normally we do a ROCK trade with a volatility this low. You're going to be able to go right into a ROCK position because you're going to get this skew that because everybody thinks the market's going up, you're going to get the skew that you're becoming excessively negative delta. You can go into a regular ROCK trade. We're not getting that now. And this is the fantastic thing about the ROCK system. Not only are we looking at, you know, your VIX level or whatever, but we're also looking at, hey, what is the price of the butterfly and how much delta we carry and coming into the trade. And if you're paying attention to that, you notice that the crazy skew is gone. The delta is much flatter now, which means the market, participants in the market, they don't think the market is going to continue up like it was, or at least they're nervous that it probably won't, which is another reason I think we're probably going to come back into a sideways range. So that's a really great observation, Andrew. Okay, and then I have, is there a new trade you will enter now? I guess I don't understand the question. We have all our trades are in for the month, so we will be entering. You know, we're already in our May V Condor, so yeah, all our trades are in. As far as what I would enter, I mean, you know, in M3 is fine. Either April or May is a really good trade for the month. I don't have an issue with the bearish butterfly either with the skew that's flat. So those are both good trades to enter. what delta theta ratio do you try to manage on a butterfly? What type of butterfly? Because we're doing different kinds of butterflies, right? So AM3 is going to have certain delta theta characteristics. Bearish butterfly is going to have completely different delta theta characteristics. Depends on what you're trying to do. Yeah, so on a bearish butterfly, I try to keep everything under 1.5 to 1. So if I had 100 delta, if I had 100 theta, I wouldn't want any more than 150 delta. Is usually what I'll run with that. Okay, that's fantastic. And if that's it for questions, then I think we're good for the week. Thank you for joining me, everybody, and we'll see you next week. Have a great week, everyone.